Ever wondered how you could earn a consistent income every month just by investing in ETFs? Let's start with the basics. ETF, or Exchange Traded Fund, is a type of investment fund and exchange-traded product that is designed to track the performance of a specific index, sector, commodity, or asset. ETFs are traded on stock exchanges, much like individual stocks, and offer a unique blend of benefits from both mutual funds and individual stocks. Imagine holding a basket of different investments all in one single fund. That's what an ETF does for you. It can hold hundreds or even thousands of stocks or bonds in a single fund, providing you with instant diversification, which is a key to reducing risk. Now let's talk about dividends. Dividends are a portion of a company's earnings distributed to shareholders. When you invest in an ETF that focuses on dividend-paying stocks, you can receive these dividends, typically on a quarterly or monthly basis. But why are we focusing on monthly dividends? Well, monthly dividends provide a consistent income stream which is particularly attractive to investors seeking regular income. Think about it. Having a reliable influx of cash every month can be a great way to supplement your income, fund your retirement, or even reinvest and grow your investment portfolio. What makes ETFs even more appealing is their flexibility. Unlike mutual funds, which can only be bought or sold at the end of the trading day, ETFs can be traded throughout the day, just like stocks. This means you can act quickly on market trends, offering a level of control that mutual funds simply can't match. And here's a cherry on top. ETFs are generally more cost-effective than mutual funds. They typically have lower expense ratios, which means more of your money goes towards your investment, not fees. So are you ready to find out which ETFs offer consistent monthly dividends? Let's dive in. Hello viewers, if you are enjoying this content, and you do not want to miss future videos filled with even more tips, tricks, and inspiration, hit that subscribe button now to stay tuned with us, and remember to comment and share. First on our list is the Super Dividend ETF, or SDIV. This ETF has carved out a niche for itself in the realm of exchange-traded funds, promising to deliver consistent monthly dividends to its investors. But how does it do that? The secret lies in its portfolio. SDIV focuses on high dividend-yielding equities across the globe. This includes companies from both developed and emerging markets. What's interesting is that it doesn't just stick to one sector. It diversifies across various sectors like real estate, financials, utilities, and more. This diversification not only helps to maintain a steady flow of dividends, but also reduces the risk associated with investing in a single sector. Over the years, SDIV has shown a commendable performance. Its dedication to high dividend equities has resulted in a dividend yield that often surpasses many of its peers. This robust yield is what makes SDIV a compelling choice for those looking for a steady stream of income. However, it's important to remember that no investment comes without risks. While SDIV's strategy of focusing on high dividend-yielding equities can result in attractive yields, it can also expose the fund to companies with potentially weak financials. These companies may offer high dividends to attract investors, but might be covering up underlying issues. Therefore, it's crucial to do your homework before investing. That being said, SDIV's diversified portfolio can help to mitigate some of these risks. And let's not forget, the consistent monthly dividends can be a great source of income, especially for those in their retirement years or individuals looking for a steady income stream. To sum it up, SDIV offers an intriguing mix of high dividend yield and global diversification. Its focus on consistent monthly dividends makes it a compelling option for income-focused investors. However, like any investment, it's important to understand the potential risks and your own investment objectives before jumping in. SDIV is indeed a great option for those looking for consistent monthly dividends, but it's not the only one. Let's move on to the next. Next, we have the iShares Core High Dividend ETF, also known as HDV. Now this is a unique player in the ETF market. HDV is an exchange-traded fund that primarily focuses on high dividend-yielding U.S. equities. The objective of this fund is to track the performance of the Morningstar Dividend Yield Focus Index, which is made up of 100 high dividend yielding U.S. securities. The beauty of HDV is in its operation. It achieves its goal by investing at least 90% of its assets in the securities of the underlying index. This means that it's designed to mirror the performance of the index, which is a compilation of companies that have consistently shown a high dividend yield. Now let's talk about the portfolio of HDV. It's quite diverse, with the fund's holdings spanning across various sectors. Healthcare and consumer goods sectors usually get the lion's share, but there's also a significant presence in financial services and telecommunications. This sector diversity helps to balance the risk and return of the fund. In terms of past performance, HDV has shown a steady growth trajectory over the years. However, it's crucial to remember that past performance is not always indicative of future results. This is a standard disclaimer in the investment world, but it's especially pertinent when it comes to ETFs like HDV. Investing in HDV does come with its own set of risks, as with any investment. Market risk, sector risk, and index tracking risk are some of the key ones. It's always wise to thoroughly research and understand these risks before investing. But here's the selling point. HDV has consistently provided monthly dividends to its investors. Yes, you heard that right. Monthly dividends. This makes it a potentially attractive option for those seeking regular income from their investments. HDV, with its focus on high dividend, is another fantastic choice for monthly income. But there's more. So buckle up as we continue our journey in the world of ETFs that offer consistent monthly dividends. Let's see what else is out there. Now let's talk about the SPDR Dow Jones Industrial Average ETF, commonly known as DIA. This phenomenal ETF is like a mirror reflecting the performance of the Dow Jones Industrial Average, one of the most recognized indices in the world. It allows investors to get a taste of the broad U.S. equities market, holding on to some of the most stable and reputable blue-chip companies across various sectors. DIA's primary goal is to provide investment results that, before expenses, generally correspond to the price and yield performance of the Dow Jones Industrial Average. It achieves this by having its portfolio consist of all 30 companies listed in the DJIA. This diversification across different sectors and industries significantly mitigates the risk factor, making it a safer bet for investors looking for stability in their portfolio. Now, let's dive into the performance history of DIA. Since its inception in the late 90s, DIA has shown a consistent uptrend, with its value more than tripling in the past 2 decades. Despite market fluctuations and economic downturns, DIA has proven itself to be a resilient player, regaining its footing and continuing its upward trajectory. But what about dividends? Yes, DIA does offer consistent monthly dividends to its investors. It has a dividend yield that's competitive with the broader market, making it a go-to option for those seeking regular income streams. It's like having a golden goose laying eggs every month, providing a consistent cash flow to rely on. However, like any investment, DIA does come with its share of risks. The performance of DIA is directly tied to the performance of the Dow Jones Industrial Average. So, if the DJIA experiences a downturn, so too will DIA. It's crucial to keep this in mind when considering adding DIA to your investment portfolio. DIA is a solid performer, but let's not stop here. We have one more ETF to discuss. This ETF, like DIA, offers consistent monthly dividends and has a unique twist that you'll surely want to hear about. So, stick around because we're just getting to the good part. Last but not least, we have the Realty Income Corporation, or simply O. O operates in a unique niche within the investment world, focusing primarily on commercial real estate. It prides itself on its commitment to providing consistent monthly dividends to its shareholders, a commitment it has upheld for more than 50 years. O boasts a diverse portfolio spanning over 50 industries and 5,000 properties across 49 states. Its approach of investing in high-quality, freestanding, single-tenant commercial properties has proven to be a successful strategy, leading to a commendable past performance. However, like any investment, O is not without risks. Its focus on commercial real estate means it's susceptible to market downturns and changes in consumer behavior. But it's the company's diversification and long-standing reputation that often help mitigate these risks. O is indeed a unique choice for those interested in real estate ETFs that offer consistent monthly dividends. So there you have it, 4 ETFs that offer consistent monthly dividends. We've journeyed through the nuances of SDIV, HDV, DIA, and O. Each one, a unique opportunity to diversify your investment portfolio and reap the benefits of consistent monthly dividends. Remember the importance of diversification. It's not just about spreading your investments, it's about reducing risk and potentially increasing your returns. And these ETFs, they're not just vehicles for investment, they're opportunities to earn a steady income through dividends every single month. Investing in ETFs that offer monthly dividends can be a game changer. It's like having a reliable stream of income that complements your other investment strategies. It's about making your money work smarter, not harder. So, are you ready to dive into the world of ETFs and monthly dividends? If you found this information valuable, don't forget to subscribe, like, and share this video. Stay tuned for more insights on ETFs and dividends.